Ah, Hello, welcome everyone. Good morning. Hope everyone is doing okay here. It is Tuesday. Apologies for yesterday. We had some technical difficulties. Um, I had some stuff to do in the morning as well, and then just everything went to crap. So, well, I guess your morning, not my morning. So, we're going to be talking about what is going on, how the week has started, what the expectations are. We're going to talk a bit about seasonality and the expected moves of the market. As we've seen over the past few weeks, just the bid has continued. Even when we saw a significant 80, 90 point downside move in the market, it just got bid back up. So what happens in these scenarios is the floor continues to increase. It is on weaker volume on the bid side, but the floor does increase, and these pullbacks get shallower and shallower, and the floor gets harder and harder to break, and the ceiling gets farther apart, meaning that those low volume areas for the ceiling are easily passed through to get a new upside move. So what's going on realistically in this market is that the bid is still sustained. What we're seeing right now is very shallow pullbacks, and there could be a little deeper pullbacks coming into these next 2 weeks. I'm not saying it has to happen, but if we talk about seasonally, the triple Q and NASDAQ has a very high chance of dropping about 2.5% over the next week and a half or so. So I think it was like over 80 or 90% chance that this would happen over the past 24 years. So very, very high likelihood of that happening. However, we've seen just a continuous bid, and I'm fairly confident to say that we're going to see some more upside and possibly all-time highs into the end of this year. So we began August with some major gains, right? The S&P has soared 20% so far in 2023, and that's the best 7 months to start the year since 1997. With the markets expecting the Fed to soon turn a corner on its fight against inflation, the tech-bound AI frenzy has really helped the underpinning of the big gains, with the NASDAQ composite up 37% to record its first 7 months its first best 7 months since 1975, while the Dow Jones Industrial Average has been on a huge winning streak since July. One of the biggest earnings seasons is on tap, with 170 companies on the S&P 500, including 4 Dow Jones composites, set to publish Q2 results. Among these are naturally tech giants Apple and Amazon, as well as healthcare giants Merck and Pfizer. We also have Caterpillar, energy players BP, ConocoPhillips, and we also have consumer plays AB InBev, which is Bud, Starbucks as well. So general market direction could be disconnected from the Q2 earnings season at this point, but some of the numbers have been coming in better than expected. Earnings per share beats almost halfway through the season, and 81% of the firms have beaten estimates on earnings per share. And this is the highest figure since Q3 in 2021 or the past 7 quarters, right? This is what Societe Generale wrote in a research note outlining that 7 stats to know about earnings season so far. Inflation has been another major topic that's been guiding the markets. And this week, we've seen the Wall Street Bet survey on the Fed's fight is still open, and the results are coming in fast, with already 1,300 respondents to the poll. Morgan Stanley strategist Mike Wilson, who has been bearish on equities throughout the 2023 rally, now sees late cycle rally driven by monetary policy. Well, he decided when to shift. In our view, the positive policy impacts have been supported by a very strong fiscal impulse, a still supportive global liquidity backdrop, and optimism that the Fed can now transition to easier monetary policy given that the falling inflation data. So these developments fostered a robust rally in 2019 that was almost exclusively driven by multiple and not earnings, as has been the case this year. I still think that things are looking very bullish, right? Inflation has been coming down really aggressively over the past few months. I don't really see a reason as to why we should really look for any kind of harsh recession, right? Potentially soft landing is in play. Very high percent chance of that happening. Another thing to mention is that realistically, the seasonal backdrop here could lead to maybe a 3 to 4% drop in the S&P before it gets picked up into the end of August. And I foresee potentials, another seasonal backdrop that comes in late September, mid-October, that has a more substantial pullback, which I think is going to be the key figure pullback into the end of the year and for the foreseeable maybe 5-6 quarters ahead realistically. So keep that in mind, right? I've been talking about this for weeks, if not months, here on YouTube, that we're going to buy the dip, just buy all freaking dips realistically. That's what I'm going to be doing. Tighter credit, right? Given a more uncertain economic outlook, U.S. banks have tightened lending standards across loan categories during the Q2 and plan to further toughen up conditions this year. So, respondents to the Fed's senior loan officer opinion survey, the SLOOS, reported tighter standards and weaker demand for commercial and industrial loans, as well as commercial real estate loan categories. Demand also weakened in residential real estate, home equity lines of credit, and auto and other consumer loans, but demand was unchanged for loans linked to credit cards. Um, so we'll see what happens here. IGN's James Knightley said that the report makes it more likely that the Fed won't need to hike rates further, as further credit contractions will naturally take the heat out of the economy. So again, as we were mentioning to our members, there was about a 91% chance that we were pricing in one more hike by the end of the year. Now it's into the 20s, so very, very substantial drop there. We also have an EV pivot. Reports suggest that ExxonMobil is in the early stage talks with automakers Tesla, Ford, and Volkswagen for supplying lithium for electric vehicles, right? Albemarle, which is ALB ticker symbol, is said to be among those lithium producers in discussion with the energy giant, helping boost the former company's shares. Previously, Exxon, who said that it's been planning to build one of the world's largest lithium processing facilities in Arkansas, and has so far partnered with Tetra Technologies (TTI) to develop more than 6.1 thousand lithium-rich acres in the state. Talking about the leader, JR Research, noted that Exxon's moves could open up a higher margin growth opportunity to mitigate the structural decline in its oil and gas business. So, all in all, I think a lot of people are going to be waiting for Amazon and Apple to report earnings. This is Thursday after the bell. In terms of news today, we have 9:45 PMI manufacturing index 10. We have construction spending along with ISM manufacturing index and job open moves, right? I think that, excuse me, tech has a little more downslide to happen over the next 2 weeks, with some of the growth names, which are inclusive of IWM and smaller caps, are still holding a pretty robust rally. As it stands right now, there are some key numbers here on the S&P 500 futures that we do have to take note of. These are going to be very, very important areas. Right now, we are back below the distribution ledge at 46.0810, which is expected to hold resistance. You've seen it hold resistance here pre-market. Right now, what we're trying to see is how prices interact with 45.90. That's a massive, massive support. I think that as long as we can sell into 4600 and 460810, the downside should continue. But the real sellers are going to be under 4590. That should open up some of the downside into the 80, into the 72. And then ultimately, we have this huge, huge area, 4555 to 60. If that area can break this week, I think that acceptance to the downside is going to be very quick. So I'm going to be watching those areas. It's going to be difficult for price to break under 45.90 and actually accept an offer, but that's a huge, huge support that we have to consider before the 80 gets traded. So 4600, 460810, those are areas that I want to see some of the offers come back on a potential pullback, as we've dropped significantly from yesterday's close in the market. That's something that you have to take note of. You also have to take note of what's going on in tech, right? I think tech could have a little more weakness in the overall market today and this week in comparison to some of the other equity markets. IWM and small caps, they could hold a decent bid. I don't expect their pullback to be super aggressive, so just keep an eye out on tech and other names. So with that being said, let's open up our live trading room here with our traders, and I'll see you guys tomorrow. We'll continue this week. Maybe not Thursday, Friday, we'll see. But I hope everyone has an amazing week, has an amazing trading day, and we'll be back tomorrow with you guys. And let's see what we got cooking in these markets. Thank you, everyone that joined me today in our live chat here on YouTube, and I hope everyone has a great time. All right, take care, everyone, and let's open up this room.